QuickBooks Pro Desktop 2021 check form. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the home page open. You can open the home page by going to the company dropdown, selecting home page. We also have the open windows open. You can open the open windows by going to the view dropdown, selecting open windows list, and seeing whether or not you want it to be collapsed by using this little caret here. We are going to go ahead and collapse it for now as we go through where we're going to go, which is basically in the vendor section. That's where we've been spending our time. However, this time we're going to be looking at a check. The check is actually outside the vendor section, but it is and it's down here in the banking section. When you look at the home page, there's other ways that you can get into the check form. You can also enter a check type of transaction by going directly to the register, which we'll take a look at as well. And you might then ask, well, why is the check form not up here in the vendor section? Because typically when we write a check, we will most of the time be writing that check to a vendor, meaning the vendor section represents cash eventually leaving the company. It represents us buying goods and services typically. Why wouldn't the check be up here in this section? One reason may be that the check form could be used for other types of decreases to the checking account. The check form, in other words, is going to be the major form that QuickBooks will use in order to decrease the checking account for a check or other type of payment. We'll still typically be using the check form to decrease a checking account. Now, we might decrease the checking account for something other than paying vendors. For example, we might be paying, when we pay basically employees, we kind of have checks, although they'll go through the check system down here. We might be paying basically ourselves. We might be decreasing the checking account in order to give ourselves money out of the business. Therefore, since it's not always dealing with vendors, maybe that's why QuickBooks didn't put it in the vendor section, although most of the time when you write checks, it would be a vendor. Therefore, they put it down here. This check form down here is typically the form that you're going to use if you're going to go directly to the checking account, meaning you're going to have something that's going to be written directly from the checking account as opposed to something that's kind of tied to some other type of transaction. For example, this item right here will in essence write a check as we saw in the past. However, the check will be a special check and it'll be marked off specially in the GL as a check that is paying down the accounts payable. And we also saw that this little widget up here will basically create a check to or a decrease to the checking account, which is a check type form. But again, it'll be a special check type form, which will be indicated on the GL that will tell us that, hey, we used the sales tax widget in order to write this particular check or record this particular deposit in the check type format. We also have the items down here like a payroll, a liability payment type of widget, and even the pay employees. Both of these basically generate check type forms. Once again, there'll be decreases to the checking account. They'll be on the check register decrease, and they'll basically look like a check form, but there'll be special check forms and will be indicated separately on the GLs when we look at it on the financial statements transaction detail, which is nice because that gives us an indication of what exactly they are used for. So if we're not paying one of these kind of special type of checks that fit within the flow here, fit within our standard flow, then we would simply use a standard check. In those cases, in other words, in cases where you're not writing a special check that is tied to these flows that has a special kind of format within the system, in those cases where you're simply writing a check and want the other side to go to basically a expense account or some other account like an asset type of account possibly, you would simply use this form. Now note, in those cases, I wouldn't actually use this form most of the time, but instead go to the register. So in other words, if I'm not using one of these type of items and I just want to write a check, usually I'll go directly to the check register. Also, note that if you typically just simply write checks and a lot of your bookkeeping system is from checks that are decreasing, hitting the bank account, you may be able to use your bank feeds a little bit more easily. In other words, when you're thinking about setting up bank feeds, it's the stuff that hits the bank that are going to be imported from the bank. If you're on a cash-basis system and you're not using accounts payable, then you're not really entering bills, but simply recording the checks as they go through or the electronic transfers, which will be in the format of check type forms, then it might be easier for you to set up the bank feeds so that because the bank feeds will set up basically as simply the checks. At least on the payment side of things. We'll talk about the customer and deposit side of things next time, which could have its own complications as well. So just realize that when you think about like a bank feed situation, the check is obviously what hits the bank. However, if you're going to enter the bills first and then record the check, then it's going to muddy up how you're going to basically record your bank feeds. You're going to be matching up your bank feeds, and you got to think about how that's going to fit in the system. Also, if you have other areas like payroll is going to typically muddy up the system for bank feeds as well, because you will need the payroll data to be entering in the system, so you will have to think how you're going to be dealing with payroll type of items. However, just writing the checks are pretty straightforward type of transactions. So remember, the check form here represents us decreasing the checking account. It will be used within QuickBooks. This is the form used even if not writing an actual check, even if it's an electronic transfer or some other format. Let's go into the check and just see a couple of them. We're not going to actually write any of them. We'll just take and observe some of them. So if I go back to the prior check here, back to a prior check, we have the checking account. This is a check to the Internal Revenue Service. Now, this one was actually using a widget in order to write this check, basically. And notice it still used the check form. We wrote this for the payroll taxes. Looks like, yeah, payroll taxes. And we wrote that with the payroll tax-like widget. And we have a special thing down here. Notice it's not on the Expenses tab, but rather on the Payroll Liabilities tab. So this was a check that was generated, although we didn't actually enter it into the check form, but we used the payroll kind of process. I'm going to go back again. Same thing for this one. Back again. Same thing for this one. And this one is Eric Smith. We're writing a check to Eric Smith. This is actually an employee check. So notice once again, we didn't actually write a check here, but used the payroll processing form, which generated a check type of format because there was a decrease to the checking account. However, this is a special type of check. If I go back another one, this is another employee. I'm going to keep going back. Now this one again, special type of check here. We used the sales tax widget to write the sales tax. We didn't use the checking account to do this, but it still processed the check. And you can see at the bottom here, it's a special check because it has this little different bottom half here. It'll also show up differently when we see it on the GL. Let's go back again. This one's a check that was using the bill pay widget, and you can tell down here because this is the bill that was paid off. So the bill's tying out to Verizon. We saw this in the past when we did the bill and then the bill pay. So it's still using a check type form. Same thing here. This one, we're paying off a loan payment here. So this one, we actually wrote a check. And we may have written this check actually in the register, but still, again, QuickBooks will use the check form. So let's just go through this one. This would be if you're not entering some other widget and you're just entering a check. We have the check number here. Now remember, if it's not an actual check but some other payment like an electronic transfer, then you would not use the number here, a check number. You put some other format or delete the number so that it will populate next time you actually do use a check. Also note that if you're using a check form and you want to actually print checks out of the QuickBooks system, you cannot print checks simply on a blank piece of paper. You still have to buy pre-printed checks, which will have the pre-printed check number on them. And then you're going to have to put those checks into the system and then print them out from QuickBooks, which will populate everything, but won't, the standard format of the check will still be there, including the check number. You want to tie out the check number in the QuickBooks system to the check numbers on the pre-printed checks. Then, of course, we have the date of the check. We have who the check is going to. We have the amount, of course, address. And then down here, we have either the expenses tab or the items tab. Now, normal checks, if we're writing like to the Verizon utility bill or something like that, the phone bill or those type of monthly kind of transactions, this account down here will typically be an expense type account. However, the expenses doesn't necessarily mean you're hitting an expense. For example, here we're hitting a loan account because we're paying off a loan, which is a liability account. So here, this tab really means that it's going to be something that you don't need some other sub-ledger in order to do, meaning you're not hitting something like inventory. So if we go to the items over here, we're typically dealing with something, possibly we're making a payment for inventory or something like that, which means that we have to track not only the account that would be affected, inventory, the asset account, but the reason we need it over here in the item is because it's also going to track a sub-ledger, which would be tracking like the amount or units of inventory. So that would be a standard kind of check. Obviously, the checking account is going to be going down. The other side, in this case, is going to two different accounts, one being the reduction of the principal of the loan, the other being the interest on it. If I keep on going back, this is going to be for a bank service charge. So notice this one is a check type form, although it's not actually a check. because this is something that the bank took out of our checking account directly. We didn't know about it until we did the bank reconciliation. And so I didn't put a check number here. We just put other for the check number. You just delete the check number. It's still a decrease to the checking account, and therefore the check form will be used for QuickBooks. And so we have the date and then the amount. There's no pay to here because it was an electronic transfer. It was the bank. So you could put the bank here, but it wasn't put in this case. It's a decrease to the checking account. The other side go into the expense account of the bank service charge type of expense. Very straightforward type of transaction. So once again, I'm going to close this back out. I would then use a straightforward transaction such as this. I would put the checks into the register rather than actually using this form, and QuickBooks will still generate that form even though you put it into the register. For example, you can get to the register a few different ways by going to the banking dropdown, use register, or you can go to the lists dropdown and use chart of accounts, then double click on the checking register and you'll see the transactions for the cash account. I then unhid this item over here so we can see our open windows. Then you will see our transactions in terms of the effect on the checking account. So notice that the effect on the checking account, this looks kind of like a check register. And mainly you have in this item, you have checks and you have deposits. But it also marks off those special type of checks that we saw before. This is the check, but it's a paycheck. And you can see it's indicated down here as opposed to a normal check, which would look like this. The normal check doesn't necessarily mean it's an actual check form. It means it's not using one of these special checks. So down here, this is a paycheck. If I double click on the paycheck, we see another paycheck type format with the payroll type of information down below. It's still coming out of the checking account. And again, even if this was an electronic type of transfer, then you'd still use this type of form. You just wouldn't have the check number here. It would be in some other format than the check number. Bill pay form, again, it's a check, but basically it's a special check down here in that it's connected to a bill and it's indicated right there. It'll be indicated on the GL as well. If we go into just a standard check, notice that this check has an actual check number to it and this one does not. They're still just simply using the standard check format, that being when you're basically just reducing the checking account and recording some other side to a simple expense side or one account side, meaning you don't have any special item that you're going to be connecting to in the flow of things, and you're not recording it to an item for a sub-ledger. So these are the most simple type of transactions. These are the ones you can enter directly into the register, which you could do here, and you could hit this one directly into the register. This one does not have a check number, and still it's a check type of format, just a simple check format. You can enter this directly into the register. These are the ones that are the easiest to deal with when you are dealing with like bank feeds as well. These are the ones that are going to download from the bank. They're easy to then add to your system because they're not involved in any other process. So you can just basically add the correct expense account and there's no problem. However, again, if they are connected to something else, like the bill payment checks, like the payroll checks, then or if they have two accounts that are being affected, or that even this Chase account, they become a little bit more complex to enter with something like the bank feed. So you have to be aware of that. We'll talk about the bank feeds after the whole practice problem, but just be aware of that as you think about the bank feeds. Closing this back out. Let's then go into our reports. Reports drop down, company and financial. Let's open up our balance sheet. So I'm going to open up the balance sheet, and then we're going to change the dates and the customized dates up top from 01/01/21 to 12/31/21, and we will say OK. We're looking then in the checking account. So the checking account is showing the detail on the checking account. Notice this data right here is very similar to the check register, meaning this data is very similar. If I go to the drop down, I'll go into the check register this way this time, banking, and then I'm going to go to use register, checking account, back to the check register. Notice this data is just another format of this kind of information. It's listing all the transactions that are hitting the checking account. And so it looks similar to this. It's just in a different kind of layout here. It tells us the type of activities that are happening once again. And once again, it's either an increase or decrease to the checking account, right? And an increase is going to be a deposit type of form that it will be using that could be entered in various different ways. We could put it into the check register. We could put it into the deposit form itself, but QuickBooks will typically see it as a deposit form. And then the decreases will be some kind of check. which could be a standard check, a normal check, such as this one, where we paid off. This one went to Vanguard, Amazon. Let's take a look at the end of the month, the end of January. Verizon. This one we paid off Verizon, just a simple check for the phone bill, and there it is. There's the check for the expense on the other side, and we see it marked off simply as a check. This one also is a decrease. It's still a check, but it's a bill payment. That tells us the fact that it uses a bill payment form, that it was a check that paid off the accounts payable, and therefore the other side, if we want to see the detail, the expense account that was affected, we have to go to the bill in order to see that. So then if I close this account, in that case it wasn't an expense account, we bought inventory, and so inventory was affected. And then this one, again, check. This is a decrease, but it's a special check. This is a paycheck. So if I go into it, still a decrease to the checking account, still looks like a check, but down at the bottom, special check, paycheck type of format. So we can't just enter that into the register. We got to use payroll, paycheck format some way. Normal check, normal check. Here's a bill payment check. This is another special check. It's a sales tax payment. So again, it looks like a check type of format, but the bottom of it is different. Doesn't just have an expense account, but rather telling us it's using that sales tax widget type of thing. So I'm going to close back out, and then this is a liability check. So again, special check. It's still a check. Decrease in the checking account. You can see the same kind of format, but now it's a payroll liability check. That tells us we use the payroll liability type widget thing. And then we go down, we have a paycheck down here. Once again, it's a check, but it's a special check. This tells us that we use the payroll system to write the check. Closing that back out, closing this back out. If we go to the profit and loss, reports drop down, company and financial profit and loss standard, changing the dates up top from 01/01/21 to 12/31/21. Then if we're writing just standard checks, the like easy checks at the end of the month where we're just writing the bills at the end of the month, then the other side will typically be to these expenses here. For example, the telephone we saw a couple times. If we double click on the telephone, one time we paid for the telephone in month 1 with just a standard check, and we just wrote a check. Which again, you can enter if that's how you pay the telephone company, easiest thing to do. You can write that just directly into the register. You can, if you're going to use bank feeds, that's going to be an easy thing for you to download into the bank feeds. Not really a problem. But if you're going to enter the bill and you want to track the bill and then pay it as late as possible, or track the bills that you owe to manage your cash a little bit better, then we would write it a bill first. So this was entered with a bill. If I look at these two transactions, here's the standard check type of format, and then here's the one where we entered the bill. Looks very similar. Looks like a check, but now it's a bill. And then we managed the bill and paid it off at a future point in time with a check type of form, but it was a bill pay check form that we paid the bill at a later point in time. When we made this bill, we increased the accounts payable, and the other side went here to the expense account. When we wrote this check, we decreased the checking account, and the other side went here to this expense account.